Imagine a world not so far from our own, where the rules of money and power are being rewritten before our eyes. A world where the US dollar is no longer king, no longer the single currency that everyone looks to for stability and trust. For decades, the greenback has been the bedrock of global finance, the language of international commerce, and the anchor for economies everywhere. But today, the whispers of change are growing louder, especially across Asia, where new ambitions are taking shape. Nations are exploring ways to trade in their own currencies, forging new agreements and slowly chipping away at the dollar's dominance. This isn't a sudden revolution, but a gradual evolution driven by both ambition and necessity, as countries seek more control over their economic futures. The shift is happening quietly but steadily, in trade deals, in central bank reserves, and in bold experiments with digital currencies that could change the way money moves. The question is no longer if the world will move away from the dollar, but how fast this transformation will unfold, and what, or who, will step in to take its place. This is about the shifting balance of global power, with Asia now standing at the very center of the world's financial future. The consequences are real and personal, from the price of your morning coffee, which could fluctuate with every currency shift, to the value of your pension or retirement savings, all of which are tied in some way to the dollar's global standing and the choices made in distant capitals. A world with multiple major currencies could mean more volatility, more uncertainty, but also more choice, more competition, and perhaps more opportunity for those ready to adapt. New centers of power are emerging, and the financial landscape is being redrawn in real time. This isn't about the collapse of the dollar, but about the rise of alternatives, currencies and systems that reflect a more multipolar world. The US remains a formidable economic power, but the world of 2025 is very different from 1945, with new players and new rules. Asia is now an economic powerhouse, seeking a financial system that truly reflects this new reality and its growing influence. The story of de-dollarization is being written right now, in the markets, in the government halls, and in the daily lives of people across Asia and beyond. The world is watching, and the next chapter is just beginning. To understand where we're going, we first need to look back at the journey that brought us here. A journey shaped by history, power, and global ambition. The story of the world's dominant currency is deeply intertwined with the evolution of global trade and the shifting tides of economic influence. The US dollar's dominance was not an accident, but a carefully constructed system that emerged in the aftermath of World War II, when the world was desperate for stability and order. At the historic Bretton Woods Conference in 1944, world leaders gathered to reshape the global financial system. They agreed to peg their currencies to the US dollar, and the dollar itself to gold, creating a new foundation for international commerce. This decision made the dollar the world's reserve currency, the anchor of global finance, trusted by nations and institutions everywhere. Even after the US severed the gold link in 1971, the dollar's supremacy continued as global trust in the American economy remained unshaken. The rise of the petrodollar system, where oil was priced and traded exclusively in dollars, created massive ongoing global demand for the currency, further cementing its central role. Today, the dollar is involved in nearly 80% of global trade transactions and dominates foreign exchange markets, acting as the lifeblood of international business. Central banks around the world hold about 60% of their reserves in dollars, granting the US what economists call an exorbitant privilege, the ability to influence global finance like no other nation. The US can borrow cheaply and run large deficits because the world is always hungry for its currency, making American debt a cornerstone of the global financial system. During times of global uncertainty or crisis, investors instinctively flock to US Treasury bonds, the world's safest and most reliable asset, a true financial safe haven. The dollar is trusted because it's widely used, and it's widely used because it's trusted, a self-reinforcing cycle that keeps it at the center of global commerce. This powerful network effect is incredibly hard to overcome, as every transaction strengthens the dollar's position. Any challenger to the dollar must offer the same stability, liquidity, and universal acceptance, a daunting challenge for any nation or currency. The deep integration of the dollar into the world economy makes it the safest port in any economic storm, a lifeline when uncertainty strikes. For Asian nations, challenging this entrenched system is a monumental task, requiring not just economic strength but also global trust and cooperation. Yet the desire for alternatives is growing, fueled by shifting alliances, technological innovation, and a changing world order. The mountain is steep, the obstacles many, but the climb has begun, and with each step, the possibility of change grows. The world is watching closely to see who will reach the summit, and whether a new era in global finance is about to dawn. If the dollar system is so stable, why are so many Asian economies actively searching for alternatives? The answer lies in a powerful desire for monetary sovereignty, a wish to control their own financial destinies without being overly dependent on the policies of another nation. Relying on the dollar makes these economies vulnerable to sudden U.S. policy shifts, which can have ripple effects across the region. For example, a change in American interest rates can trigger capital flight and create instability in Asian markets, making it difficult for local governments to maintain economic stability. Asian nations increasingly want more control over their economic destinies, seeking to insulate themselves from external shocks. The weaponization of the dollar, using sanctions as a foreign policy tool, has made countries wary of U.S. leverage, pushing them to explore new options. Asia's rapid economic rise is another major driver. As the region grows in influence, it seeks to reflect that power in its financial systems. Intra-Asian trade now surpasses trade with the West, making regional cooperation more important than ever. It makes little sense for two Asian countries to use a third country's currency for their own trade, especially when their economies are so interconnected. Using local currencies is not only more efficient, but it also reflects Asia's growing self-sufficiency and confidence on the world stage. New technologies like digital currencies and central bank digital currencies, CBDCs, offer innovative ways to bypass the dollar-centric system entirely. These financial innovations could reshape global finance, giving Asian nations new tools to assert their independence and shape the future of money. The digital frontier is opening up rapidly, and Asia is eager to lead the way, setting new standards for the rest of the world to follow. As technology and ambition converge, Asia's search for an exit from the dollar system is only just beginning. At the heart of de-dollarization is China and its currency, the yuan. Beijing's strategy settle more trade in yuan, encourage partners to invoice in its currency, and sign currency swap deals worldwide. China's Belt and Road Initiative structures loans in yuan, creating demand abroad. The Cross-Border Interbank Payment System, CIPS, offers an alternative to SWIFT, supporting a yuan-based ecosystem. But obstacles remain: strict capital controls, limited market transparency, and global trust issues. For the yuan to rival the dollar, China must relax controls and build investor confidence. The march is steady, but the road is long. Each trade deal and payment system is a step forward. The world is watching to see if the yuan can truly challenge the dollar's throne. India's approach to de-dollarization is pragmatic and opportunity-driven. Sanctions on Russia forced India to pay for oil in rupees, bypassing the dollar. Special Vostro accounts let Russian banks hold rupees for trade and investment. India is expanding rupee trade with partners in Asia and the Middle East, aiming to reduce costs and build a regional currency ecosystem. The rupee isn't fully convertible, and India's financial markets are less deep than China's. But New Delhi is patient, focusing on bilateral deals and incremental progress. The goal, a larger international role for the rupee, one trade deal at a time. India's quiet effort is helping build a more multi-currency world. The move away from the dollar is also a collective effort within powerful trade blocs. The Regional Comprehensive Economic Partnership, RCEP, encourages local currency settlement among its members, reducing reliance on the dollar. ASEAN is building payment connectivity, letting people pay across borders in local currencies. BRICS discusses shared payment systems and lending in local currencies, signaling a political will to challenge the dollar. These regional efforts create a network effect, making local currencies more viable. A multilateral approach builds trust and liquidity across a wider area. The dynamic is shifting from a single challenger to a decentralized multipolar system. Trade blocs are fundamentally reshaping global finance. Technology is now a powerful ally in the push for de-dollarization. Central bank digital currencies, CBDCs, are digital versions of national currencies, issued by central banks. China's digital yuan is already being trialed, and projects like mBridge are testing cross-border payments without the dollar. India and others are developing their own CBDCs, aiming for more efficient, inclusive financial systems. CBDCs could enable instant direct international settlements, bypassing traditional banking rails. But challenges remain: cybersecurity, privacy, and interoperability. The US and Europe are moving cautiously, wary of disrupting the current system. The digital currency race is on, and Asia is leading the charge. The next generation of financial infrastructure is being built now. Despite Asia's momentum, ditching the dollar is incredibly hard. The global system is built around the dollar's scale, liquidity, and trust. US Treasury markets are unmatched in depth and security. Central banks and investors hold trillions in dollar assets. They won't abandon them lightly. Trust is key. Investors need faith in the political and legal systems behind a currency. The US offers predictability. China's strict controls and opaque system make trust harder to build. A world with multiple currency blocks could be more volatile and complex. The simplicity of one dominant currency is a powerful advantage. Alternatives like the yuan and euro aren't yet ready to fully replace the dollar. The shift is happening, but it's slow and incremental. The dollar's reign is challenged, but far from over. We stand at a turning point in economic history. Asia's move to reduce dollar dependence is real and accelerating, driven by economic rise and digital innovation. China settles trade in yuan, India pays for oil in rupees, and regional blocs build new financial highways. For the US, this means a slow erosion of its financial privilege. For the world, it could mean a more balanced but more complex financial order. The dollar's dominance is built on trust and inertia. Challenger currencies face immense hurdles. The transition will be gradual, unfolding over decades. We're moving toward a multipolar currency world, but the dollar will likely remain first among equals. The real question: what will a world with several major currencies look like? One thing is certain: the story of money is changing, and Asia is holding the pen.